E-mini S&Ps end the day lower after a busy week, which included inflation and also included today's Triple Witching Friday, which brought together the stock indices and futures expirations all in one day. It really just pumps up the volume more than anything else. Doesn't typically have a big effect on the macro picture, but ultimately we did see stocks ending lower today. But again, higher inflation, shifts in Fed rate cut policy expectations, all that coming through and seeing stocks move lower. Ultimately, though, the first 8 weeks of 2024, we saw 7 of them rising, and over the last 2, we've seen modest declines, yet we are still up big, especially when going back to October. E-mini S&Ps are up over 24% since those October lows. So still seeing that trend, even though we've seen back-to-back weeks of declines. And again, E-mini S&Ps ending the week at around 5180. Now, what does this mean for volatility? Well, volatility typically moves inversely to the direction of the indices. So as we see indices moving higher, volatility goes down, and that's what we've seen for most of 2024. However, we did see volatility move higher today as indices were lower, only modestly, but they were down on the week. Recall late last week, we saw volatility firming up ahead of the key inflation data that we saw. So ultimately, volatility higher today as indices were lower, but lower on the week. Lastly, let's talk about what we have next week. You can look at all kinds of data points and pieces that are coming out. But ultimately, it's going to all be about the Fed. The FOMC on Wednesday comes out, not about whether they're going to be raising or cutting rates, because they're not expected to do anything. It's about the messaging we'll get from the Fed afterwards in the statement, as well from the press conference from the Fed chair himself. So ultimately, equities are going to be looking for keys as to when the Fed may look to cut rates first. That has been shifting around over the last several weeks or so. Now the market hanging its hat on a June rate cut at about 65%. And if the market tends to shift a little more in the direction it has, we could see that shifted out to July, which right now is priced for 100%. But again, all eyes will be focused on expectations for that June FOMC rate cut. So a busy week in stocks. We saw higher inflation data. We saw a big Triple Witching Friday. We saw indices moving lower. All this could culminate in coming ahead of next week's March FOMC meeting.